Cashflow Diary Podcast, episode 600.
Welcome to yet another exciting episode of the Cashflow Diary Podcast, the podcast that teaches you insider tips, tactics, and strategies for creating leverage streams of cash flow into your life. Learn from top-performing entrepreneurs, business owners, investors, and thought leaders from across the globe as they share their secrets to success. Like what you learn on this and other Cashflow Diary podcast episodes? Go to learninvestingnow.com and sign up to receive powerful tips and information that will help you succeed as an entrepreneur and investor. Now, here's your host, investor, entrepreneur, business owner, educator, speaker, author, and master facilitator of Robert Kiyosaki's cash flow game.
And I'm glad that you are here today because we are going to talk about, well, honestly, my favorite subject. What is that? Cash flow. It's in the show name, and there's a reason for it. Because you and I all know that cash flow is king. When we first got started in the real estate world, my wife was dreadfully sick, and so was I. She couldn't eat or drink. I couldn't walk or talk. And at the end of the day, we still needed a source of income, which means learning how to own and control and benefit from the use of assets while you're doing something else is key, dare I say paramount, to how you and I are going to survive, live, thrive, and most importantly, do that thing called retirement one day. Now, with that being said, it means new skill sets often have to come to the table. And sometimes you may not want to develop the skill set. You may not have the time or the capacity to develop those skill sets. And therefore, you need to leverage someone else's skill set. And in this particular case, those individuals are typically known as syndicators, and you may not know how to find them all the time. Well, that's one of the reasons you're going to hit that subscribe button right now, because we have featured a number of them, and we have a dynamic duo with us today, and I'm excited to introduce you guys to them because you guys know, when it comes down to making real estate happen, it's important that you are working with complementary skill sets, that you're working with individuals that you can absolutely know that they have character and that they are competent. And what it comes down to is when you can find two people who can, well, jive, get along together, and are willing to take the risk to go out there in the world, that says something special about them that I think needs paying attention to. So, what does that mean? What are we going to be talking about today? Well, we're going to be talking about doing it in the world of real estate investing syndication. Now, I love their company name because you guys know that, man, our company name is West Egg. Theirs is Good Egg. And I'm just like, okay, no, we didn't plan it. And Goodegg Investments, I have both of them here today, and I know that you and I, we're going to learn a lot. We're going to ask them a ton of questions. But here's what's important for you to understand about these two wonderful ladies. It's that this isn't, quote unquote, their first rodeo to speak. What I mean by this is that they have business experience. They are making a choice to do good and do well. Those things aren't mutually exclusive, and they're here to share that story with you, and most importantly, how you can begin to do some of the same things. So let's get ready to listen, love, and learn from Annie Dickerson and Julie Lam. Ladies, how you doing?
Doing well. Thrilled to be here.
Good. Now, this is your first time here, so I've got to ask you guys the same question I tend to ask everybody else the first time that they're here. You ready?
Shoot.
All right. I tend to look at today's entrepreneurs a lot like yesterday's superheroes. You know, like Wonder Woman and Black Widow and Hulk and Spider-Man, etc. Because I think entrepreneurs and superheroes have a ton of things in common. For example, if you think about it, as a superhero, we can fly around town, and I see entrepreneurs as those doing that. We save customers one sale at a time. But also, like superheroes, you know, we have this evolution process, if you will. Think about Spider-Man. There was a time where he's just a kid going to school, doing his thing, and then one day gets bit by a spider, discovers I have a superhuman ability, and he has to choose whether to use it for good or for evil. So my question to you as follows. before becoming co-founders of Goodegg, before your Investing for Good book and or the podcast, before your course, The Real Estate Accelerator, before all of the things that we know you for today, what we want to know is, who is Annie Dickerson and Julie Lam?
Well, I can start. This is Annie. I started out with nothing related to real estate at all. I started out as an elementary school teacher. I taught fourth grade with Teach for America. And my husband and I were living in DC at the time. And we set out to buy our first home. And being in our young 20s, we thought, we'll be trendy and we'll buy a loft or a condo in Adams Morgan or DuPont Circle. And we started looking at places. And as luck would have it, our realtor said, a condo would be nice, but you're going to be paying a lot of fees. Have you ever thought about a row home, which is very common in DC? They're like townhomes. They're right next to each other. And he said, often there's 2 units in there. There's the main unit, and then there's a basement in-law suite. And so we said, first we said, why do we need all that extra space? It's just the 2 of us. We don't have any kids. And he said, well, no, if you play your cards right, you can rent out that basement in-law suite and you can help, your tenants can help pay down your mortgage. And so we did that. And that was our first experience with what we now know as house hacking. And so we loved that, did that for several more duplexes. And then once we were tapped out there, we decided to invest out of state. Quickly realized that, first of all, when you're living in the Bay Area, which is where we live now in Oakland, California, and you decide to invest outside of California, you realize that everything looks like it's on fire sale. Like, wait, what do you mean I can get 4 units for $200,000?
Right? Did it have a roof?
Right? I know, right? So we bought a bunch of properties all at once, and things were going well until they weren't. And that's when we, through lots of research and digging, found something called passive investing through real estate syndications, which you had mentioned briefly, Jay, and which I'm sure we'll talk more about. And it was through that process that Julie and I started talking, and then we eventually founded Goodegg Investments. But I'll let Julie tell her side of the story as well.
Yes, because I want to get to the how you found each other part, because I know that many of the people listening, they would love to find that, Batman's got Robin. I'm not going to ask you who's Batman and Robin, because I know that would probably be a conversation here. But at the end of the day,
I'm Batman. We'll just lay it out there. I'm Batman. So
there it is.
Throw down later.
Here we go. But at the same time, yes, Julie, I would love to know, who is Julie Lan?
Yeah, so I started investing in real estate about 11 years ago. It was 2009, and my husband and I, boyfriend at the time, husband now, father of my 3 kids, we were just doing the traditional narrative of go out and buy a home, because that's what we're taught to do to grow our wealth, right? And so it just so happened for us that it was 2009, and it was the best time here in the Bay Area to get in. And we bought a condo, and we ended up house hacking. We ended up buying a few more properties in 2009 and 10. As the market cycle started to mature a little bit, 2013 and 2016, we started to sell off a lot of those properties. And as I was starting to think about what is the best thing that I can do with this money to make sure that it is going to work the absolute hardest for me and serve me in my life today. And so coming from California, I was thinking, okay, maybe, where we're investing for appreciation, it's long-term hold, long-term buy, no cash flow. I thought maybe if I invest for cash flow, that this would be, some novel idea. Like I can invest and create some money that would start to come into my bank account. And so that's what I started to do. Started investing out of state, started buying single family homes, smaller duplexes. Quickly realized, very similar to what Annie was saying, that this was a long strategy. This is a long game too, right? I mean, at $200 a door, this is going to take forever, to get to a point of being able to replace income. Yeah. And so I knew that I wanted to scale and I wanted to go farther faster and I wanted to get into multifamily. But as you alluded to in the beginning of the conversation, I don't have any of those relationships, and I needed to be able to leverage those relationships that other people had, whether it be with investors or brokers or property management teams or construction folks. And so I discovered the opportunity to get into multifamily as a passive investor. Never even knew. I heard of syndications, didn't know what it meant, didn't know what passive investing meant. Around the same time, I had read The Little Purple Book by our favorite guy. And I was like, oh my gosh, this is what I need to do, is the passive investing, right? It's about the goal being created all these little passive income streams. And so after about 6 to 8 months of doing some research in multifamily syndications, I finally found a partner I wanted to work with in a market that I loved and all of that good stuff. Pulled the trigger on my first deal, and it was like, boom. From that moment on, everything in terms of my strategy, investment strategy, had changed. I have 3 kids. I'm working a full-time job. I'm commuting 2 to 3 hours a day. I don't have time to be on the phone with my contractor 2,000 miles away trying to make this BRRRR strategy happen, right? So I'm like, I need to get into more of this syndication stuff. And it was at that moment that I realized that I wanted to help more people get into the type of investment that I had gotten into. And then fast forward about 7, 8 months after I did my first deal, I did just that. I partnered on my first deal. I did about 3 deals before Annie and I partnered up. And that was about 2 years ago when we co-founded Goodegg Investments together. So
love it. Love it. And to be clear, everyone, BRRRR works until it doesn't. And then at the end of the day, what you're hearing is what I've always said. Where you start isn't necessarily where you stay. Right. So be open to you becoming a bigger, better, better version of you. And as that happens, you become capable of creating more value in the marketplace. So, ladies, I'm curious, what was that? It's what I like to call that superhero moment. So in Spider-Man, there's that point at which he realizes, oh my gosh, I have the superpower. Now I've got to choose to use it. And I'm assuming that same thing had to happen for both of you separately, in the sense of, oh my gosh, I know Julie, I know Annie. If we did this together, we could do this. What tell us about that time, that moment?
So Julie and I met at a real estate investing conference. And if I'm sure you've been to real estate investing conferences, you know that when it's break time, there's a line out of the men's room, not the women's room. There are far more men at these real estate investing conferences, most of them in suits. Yeah. And so Julie and I were among very few women who were there. And we're both Asian women, so we hit it off right from the start. We're both busy working moms. And at that point, I had just quit my job, and Julie was wanting to quit her job. And so we struck up a conversation about that. Didn't talk anything about the partnership at that moment, but she was running her business. I was going to run mine. And then we left. And so I guess that was the spider bite moment, maybe. Mm-hmm. But nothing had happened at that point. We didn't realize we had superpowers yet. And then we continued to see each other, off and on at conferences and then coffee dates. And one day, a couple months in, we sat down, and at this point, she had quit her job, and I had been blogging and creating content for a couple months. And she looked across the table at me and she said, what is the part of this business that you love? What gets you out of bed and what gets you excited? And I said, oh my gosh, it is the content creation. If I could just educate people all day long and show them how all of this works and create videos and blog posts, and I could do that all day long. I said, if I could take one thing off my calendar, it would be talking with investors and scheduling the coffee dates and the calls and answering their questions. And she said, are you kidding? I love that part. She says, that's the part that gets me out of bed. I love those tricky questions. I sit in front of the blank screen and I know I'm supposed to blog something and I don't know what to write about. And so that was the moment when we both realized this superhero moment, as you put it, where we realized we were both trying to accomplish the same thing, trying to help the same people, coming at it with different strengths and different weaknesses, and we realized we were so complementary. So that was the moment.
And it's so funny because in that moment, as she was sitting there saying all of this, like I knew already in my mind what I was missing in my business. Because like I said, I already done a couple of deals. And I knew that I just needed somebody to do the blogging and to do the videos and all of that. And so when she started saying this, it was just like, ding, 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 like alarms were like going off in my head. Like, this is the person, like she is the one. And, Annie does all of our content creation from, our website to the branding to all of that. And so you obviously see, how beautiful all of that is. And so it was like love at first sight. I was just like, boom, this is it. This is the one right here. And I'm like, we need to make this happen. Like, how big of a ring do you want? Like, you need to just tell me how big you want the ring to be. What do you want? 5 carats, 10? You tell me what you want, girl. I'll get it for you. But that's kind of what worked out. Yeah.
That's one of those moments where you're like, okay, hold on. Did somebody like put a bug in my room? How did she know that that's exactly what I was hoping somebody would say. I didn't know it was you. Oh my God. Yeah. I get that. I get that 100%. It's truly that 1 + 1 equaling 3, if you will.
Yeah.
Because that's sometimes what it takes. And it just happens to be that everyone, you were already on the path and headed towards the same outcome and wanting that. So now I have to ask, because there are certain decisions and certain things that are done very intentionally, and I have to know, why Goodegg?
Yes. So Goodegg is about building your nest egg and investing for good.
Got it.
So from the very beginning, we've always talked about not just putting your money to work for you and creating wealth, but also leaving a legacy for your family and having social impact, creating win-win situations for everyone. And that's really what Goodegg Investments is about.
Got it. So was there a like a list and that one made it to the top, or was it like, oh, Goodegg, that's just the one?
Jay, I think it was a moment of divine inspiration. I can't explain it. I actually created a video that shows like my exact notebook way back in the day when I was brainstorming all these ideas. And, when you're trying to come up with a business name, it's like the biggest burden, right? Because it's like this huge monumental task and there's no boundaries. So I started by just, and for any listeners out there who are, trying to come up with a business name, this is the process that I went through. First, I started by looking at all of the other businesses out there in our space and just writing down all the names. They're like, BlackRock and Stonebridge and really formal, hard sounding names. And I thought to myself, well, that's not really what we would want to project in our company. So then I thought, okay, you know what? I'm just going to put this list aside for a second and think of something completely different, completely off the wall. And then there's a section in my notebook that's like Penguin Capital, Snowball Equity, like totally off the wall, fun names. And none of those quite worked either, but it got me thinking outside the box.
Yeah.
And then it started with something, when you're thinking about animals, you're thinking about like fun things, and then something with egg, and then Goodegg. I can't explain it because there's nothing before that in my notebook, and all of a sudden Goodegg is right there. So I don't
Julie,
know.
Yeah.
Take us to the moment that she comes to you and goes, I got it.
Yeah.
Goodegg.
Yeah.
You're thinking, I've got to go talk to investors. Okay. What's going through your mind at this moment?
So I'm going to back up a little bit. So
Okay.
Annie actually had created, so like she was saying, I was doing my business, she was doing hers, and she had just created Goodegg Investments, and she was going to actually run with that as her business on her own. And this was before we partnered up. So we co-founded Goodegg Investments together, but Annie actually had that name already in place. And so I knew that was her business name at the point at which we were talking about potentially partnering together. And it was this, it's so hard for me to explain, but everything that I had in my mind about how I wanted to approach what we were doing with multifamily syndication was everything that Annie had created in her shell of Goodegg Investments of what it was at that point, which was maybe some blogs, maybe some videos in the name. And it was like when I saw that we were in a group together and she had said, hey guys, I just launched my website, go take a look. And I clicked on it and it was in that moment again where I was like blown away. I mean, I was just like, I have never seen anything like this in the real estate space in terms of the just the name and, everything, the investing for good. And that's really how we really came together, was on that, because Annie had said, here's this business I want to create and here's what I believe behind it or see behind it. And I saw so much too behind that. And that's when I was like, this is everything I've always wanted to put into my business. But my business was Lam Capital Group. It was very boring. I had the ugliest website. It's still up today. You can go look at it, lamcapitalgroup.com. And I didn't know I had all the ideas that we put. And so now the way it works is like I have a lot of ideas and Annie is the executor. She takes all of that and brings it to life. Yeah. And so in that moment, I realized that this is everything I've always wanted to create, but didn't know how to get out there. And Annie was the one to create all of that. So I've loved it from the beginning.
Got it. I love this conversation. So Julie, there's a question that I often get, and I think you're in the perfect position to answer, because as we're training individuals and helping them become real estate entrepreneurs in various fashions, I often hear things like, well, Jay, I just want to do real estate. I don't really, why do I have to bother with a podcast or creating content? Can't I just go get investors, and can't I just go find, the landlords that I need to deal with without having to do any of that? I'm really curious to hear your perspective, because you said this part of the business was showing up as something that was missing for you. And I think it would be very valuable for everyone to hear your perspective on why the things that, in this case, that Annie's bringing to the table absolutely are critical to the lifeblood of a business, even if all you want to do is just do real estate.
Right. Yeah. And, what was happening was I was spending so much time on the phone talking with investors, saying the same things over and over and over and over. And I just thought to myself, if I had a better thought leadership platform, a better way to, relay that information while I'm sleeping so that people can get out there and learn from us, and I don't have to continue to spend an hour and a half on the phone every time repeating the same information, then this would be a game changer. Because right now I'm talking to every single person and repeating the same information. They don't have a way to get to know me. There's no way other than reading a couple of blog posts that I put up, which weren't really the best. But how do they get to know us, right? And it was like, boom, Annie did all the videos, she did all the content. And we reached a point shortly thereafter where people would say, Julie, I feel like I already know you guys because I've watched every video you've put out. We've read every blog post you've written, and we've heard you on a couple of podcasts, or we've, watched all the YouTube videos. I'm ready to invest. So my phone calls that went from an hour and a half long to answering all the same questions went to 15 minutes. I understand how it works. I get how everything, the structures, I get syndication. I'm ready to work with you. Right. And now that is the power of taking someone a cold lead to a hot lead. Right. And how do we take someone who doesn't know us at all and isn't educated at all about syndications potentially? And how do we get them to be a warm lead or a hot lead that actually is ready to invest alongside with us? And that was the key right there is, the content. And it still continues to be a focus for us today, making sure that we're getting content out there and getting it out to the right people at the right point in time and all of that kind of stuff. So.
Oh, absolutely. 100% agreed. And I'm just glad that somebody else is saying it this time instead of me. Because it's like, because people, they recognize that there's a lot of effort and work behind it and all this other stuff. But they somehow believe that it's not a part of the business. And I keep having to beat the drum of, no, you don't understand. The content is your marketing. You have no idea. You must. It's not like optional. It's not like you get to not do it. It's not like I'm doing it just because I want to, but I just discovered that I like doing it. I had no idea.
Yeah.
But at the end of the day, you don't get to skip it. It's
Right.
not optional, because you've got to make sure that people understand who you are and what you guys are doing. So on that standpoint, you guys have taken a number of stands, so to speak. You stand for a particular type of customer that you are looking to serve. So Annie, if you could share with us the evolution of that decision. How were some of those choices made? Because obviously then once you know that type of customer that you're serving, it's going to direct what the content needs to be, what it needs to say, the points it needs to address, etc. So how was that determined?
Hello there, entrepreneur. This is Jay Massey. I know that if you've ever gone over to the site, CashFlowDiary.com, you may have asked yourself, where on earth do you get a domain name from? Especially as you are beginning to build your bigger, better, badder business, you need a web presence. You need the email address. You need a way for people to contact you electronically so that you can stop doing the @gmail.com game. Well, the good folks over at GoDaddy have definitely supplied us with every domain that we have ever used. So what I want you to do is I want you to go over to trygodaddy.com/CashFlowDiary. Again, that's trygodaddy.com/CashFlowDiary, because it's a quick way for you to get set up to capture your domain name the exact way that you want it. They got easy search functions, and most importantly for you is that you'll be up and running today. As I said, once you get started, stay started. Don't let small little obstacles of how to get your own domain name going stop you. So again, go to trygodaddy.com/CashFlowDiary, and let's get back to the rest of the story.
Oh man, that was a monumental decision and shift in our business. At first we were like many who start out, we were like, anybody who has money, come on over. We'll take you. We got a place for you. You got $50,000. Come on down.
Right.
And very quickly we were realizing that the content we were putting out was getting more and more generic. Because how can you write a piece of content that speaks to everyone? You can't, because anything you say, you're going to be afraid you're offending someone or not connecting with someone. And so you start sounding like a machine. And so then we said, well, that's not quite right. We're not trying to target everyone. Okay, who are we really trying to help? And so Julie and I, going back to that very first conversation that we had when we met at that conference, we are both working moms, and we got into this because we wanted to create passive income so we could spend more time with our families. And a lot of our investors, especially those who really resonated with our brand and our message and were investing repeatedly on multiple deals with us, were also working moms and working parents with young children. They felt the same pain points that we were. And so we narrowed down on that target audience, is young working parents who have been climbing the corporate ladder for a while, but are finding that they're having way more meetings on their schedule than they had anticipated. Their kids are growing up before their very eyes, and they aren't able to travel the world with them like they always wanted to. And so once we got clear on that, and especially we pinpointed it down to the working moms, and we created an investor avatar. Her name is Jen. We know everything about Jen, how many kids she has, the type of dog she has, the magazines she reads. We know everything about her. And so whenever we get stuck creating content, now we think back to Jen and we say, okay, well, where is Jen in her journey right now? What are the questions that she has? Where is she getting stuck? And how can we create just one piece of content today that will get her one step closer from where she is right now to being able to enjoy that passive income and spend time with her family like she wants?
Oh, so perfect. I mean, I'm beyond excited that you're saying exactly what you have no idea. Well, maybe you do. This is exactly how we end up helping individuals to help them understand that. And they ask me questions like, Jay, why do I need to know what magazine they read? I'm like, trust me, just think about it. You absolutely do. But so now, Julie, what I want you to do is take that and because here's the next step that also becomes very difficult for people. How do I take that information and then, Jay, what does the investor look like? How do I find them? What to you, when you hear that about Jen, what does that mean to you from a real estate perspective, so that you know how to talk, how to find, how to work with your Jens of the world?
Yeah, I mean, it basically allows us to, like Annie said, understand what her pain points are. We know where she's hanging out. We know what her mindset is like. We know what drives her, what motivates her. We know why she wants the money, because we know what her interests are. And once you start to get all of this down, when you're talking with investors, suddenly it's like you're reading their mind, right? Because they get on the phone and they start talking, and you're like, oh, I already know why you're here. Like, they'll say, well, I'm a mother, I have 3 kids, I work a full-time job, I'm really busy. And it's like, I already know why they're there. And then all of the subsequent questions, now instead of being, reactive, I'm being proactive, where I'm able to address her questions before she even asks them. And that in itself is like such a powerful thing, to be able to convert a cold lead into an actual investor. And so once we have narrowed that down and we know, now we can anticipate, right, all of the questions that Jen or the Jens of the world are going to ask, and have the answers to those questions ready before she even asks them, and make a sort of presentation on the phone that answers all of those questions before she even gets the chance to ask them. And that's the power of that right there, is being able to, basically become a mind reader. So
100%.
Yeah.
You see, there's the title of your next ebook, Become a Mind Reader.
Yeah.
So
don't give it away, Jay.
Yeah. Well, I've tried to give it away.
Yeah.
I've tried, but I just want to do real estate anyway.
Yeah.
So here comes the $2 billion question, if you will. Then is, how does that inform, I guess, the types of real estate transactions this looks like? What does that look like for you ladies when you're like, okay, the Jens of the world are here. They're coming to us now. That means these are the types of deals that we're looking for. This is what we do. This is what Goodegg is about. Does it even inform your markets? How far?
Oh, yeah. All of that. I mean, I think so much of who Jen is who we are too. It's like a combined of between Annie and I, what our values are, what our net worth is, what our income is, what our financial situation is, what we look for. And so that's really what guides us in our acquisition process, is what type of deal would we want to do? Right. And that's essentially who Jen is she's kind of a mix between Annie and I. In terms of, number of kids, jobs, desires, real estate experience. She's probably not as experienced as Annie and I, but we look for investments that are, okay, well, take us 5 years ago or take us 7 years ago. Where would we have been and what would we have been looking for? Conservative investments. Reasons behind why are we investing in certain markets? Not just, oh, well, we like the Dallas market. But why? Why are we investing in the Dallas market? And be able to back that up. Like, if I'm investing in any market, I need to have fundamental reasons of why we're looking at that market. I need to have a sound strategy, because we know we're not at 2009 anymore. Are we at the top? Who knows? Right? I always say it's not about eliminating risk, but it's about mitigating the risk. It's like taking the big book of risk and saying, okay, we know page 1, that's the risk. Page 2, that's the risk. Page 3, that's the risk. And then trying to figure out different ways that we mitigate each of those different, possibilities that expose us to risk. Because if you take the risk away and you erase it all together, out goes the 20% annualized returns. You can't get a 20% annualized return with no risk. So the risk is there. It's just about how can we mitigate that risk. And so, being really clear on what our needs are and our wants are in investments really is what Jen wants. And so that's how we do, decide, is this a deal we want to get into or not? Is it conservative enough for us? Is it, are they too aggressive on the underwriting? Is there not enough of a track record? Is there, there's a whole due diligence check that we go through when we look at working with a particular team in a particular market on a particular deal. But yeah.
Absolutely. Sorry, go ahead.
And to add, at the end of the day, when we think about Jen, we know that she's very busy. she's not passionate about real estate like we are. She doesn't spend her time nerding out about cap rates and equity multiples. She just wants somewhere to put her money where it'll work for her and her family. Right. And so that's what we have that in mind. So we provide the white glove service, the world-class investing experience for her. And then also we're looking for investments that are a win-win so that she can feel really good about investing her money. You don't feel good when you invest in the stock market. I mean, the up and down arrows. I mean, I don't have time for that white knuckle experience. Right. And neither does Jen. She wants to feel good about her investments. She wants to know that her money is being put to good use to revitalize these communities. So we also keep that in mind as we're looking for investment opportunities.
I love it. So, and in fact, I know for us, we ended up developing, I think it's 152 questions. That's an entire due diligence check. Yeah. Because it was just like, it's too hard to not have, you gotta have something because there's so many questions that you have to answer. And then there's a concept that I love because you guys keep saying, you're saying around it that I teach, it's around called the investor identity concept. Mm-hmm. You have a clear understanding of what your own investor identity is, and most importantly, the identity of many marketplaces. And I'm just going to make an assumption that the teams that you work with have a very similar identity philosophy, if you will, and so do those deals in order to achieve the goal. But I got a question because I use the word conservative too, but conservative is also relative. Mm-hmm. For example, for me and the stuff that I tend to like to do, a conservative deal, it could easily be a building that is 100% vacant right now. Mm. I can call that conservative because there are so many things that I now know that I don't have to do, so many risks that I'm not dealing with. Mm. I'm interested to hear what you ladies, what is Goodegg's definition of conservative?
Yeah. Annie, you want to take that one or?
I'll start. And then you can add on.
That was a hot potato.
I'll start and you can take it. But one of the first things that we look for in any investment is something that cash flows right off the bat.
Got it.
And so, when you're thinking about, like when I think about our smaller rentals, right? Yes. When we buy them, we want to make sure that the rent that's coming in every month is going to be able to cover the mortgage and the expenses. And then we get a little bit of cream on top. That's the cash flow, right? And so it's the same with these. I mean, most of the time we're investing in 200 to 500 unit apartment complexes. So it's the same. It's just on a massive scale. You want to make sure that the cash flow that's coming in, that rental income that's coming in, is going to be above and beyond the mortgage and the expenses. And the reason for that is that we want to have multiple backup plans. That goes into the conservative aspect, right? Multiple backup plans. And so one of the backup plans being, if we don't have to do any renovations, or if we can't do any renovations, we don't have to do them. We can just hold the property as is and continue to cash flow month after month. But the other aspect, that opportunity, is value add. So we invest in value add multifamily properties, which means properties that need a little bit of love. They're not perfect. Their kitchens may be a little bit outdated. The flooring might be peeling apart. And so then we go in and we do those renovations. And so that's conservative in another sense, right? Because you have this added opportunity to force the appreciation.
Right.
But Julie, I'll let you add on to that.
Yeah. I mean, I think some other things that I would add in is that, right now for us, acquiring a building that's 100% not occupied would for us be really risky. I think from a lender standpoint too, they won't allow us to do anything that's less than 85% anyway. I think most of the properties that we're buying at closing, we're probably looking at like a 90% occupancy level. And then through the renovation period, you'll see it dip a little bit beneath that, but usually never less than 85%. We're looking for LTV somewhere between 65 to 75%. So for us, that's 65% is pretty conservative. I see some folks out there who are toying around with the 20%, 80-20. I think that for us, that's a little bit risky. You're getting back to everything that happened in the last downturn in terms of being over leveraged. And so we definitely want to stay away from that. We're also, again, looking at these markets that have a lot of job growth and a lot of population growth, because to us, that's a way to hedge. It goes back to those risks, that book of risks I was talking about. So one risk is if the occupancy tanks, then you're in trouble, right? Can't pay investors, can't pay the debt. So how do we hedge against that? Well, it's by investing in these markets that have a substantial evidence of job growth and population growth to hedge against any kind of downturn that we know we're headed for. Making sure that the loan that we're putting on the asset is a good one, that, you're not getting in over your head on maybe a 5-year term, loan. And if it is, then you have to make sure that there's multiple plans backed up so that you don't find yourself in year 5 having to sell when it might not be a good time to sell. So, but I think I could kind of go on and on.
Yeah. I know.
I don't have a long of an answer, but I could go on and on in terms of like underwriting. When you look at somebody's underwriting, you can see the first thing I look for is like, what are they projecting in year over year rent growth? If, they're even for a value add deal, year 1, you could see a 5 to 7% increase. It's okay with us, but the year over year after year 1 should not be any more than 3%. 5% at the max, but you see some people underwriting to 7% year over year. Like, to us, that's really aggressive at this point in the market cycle. I think 3% is even, you're kind of pushing it, because assuming we hit some kind of a recession, those numbers are actually going to go and become negative.
That's the other direction. Yeah. And you've illustrated perfectly the point that I was after, is the definition of certain words that people, when you don't spend your life, as was said earlier, nerding out over this stuff, you can hear the words, it's conservative, and you go, okay, great. But you don't know what conservative to that particular individual means, and you need to. It's not like, well, they said it was conservative, so therefore it's good. Well, everyone's got a different definition of what that looks like, and they have it for their own reasons. And if you don't take the time to understand that in and of itself is a risk. And that's really what you've just illustrated perfectly, is because there's no one definition. There's no right one. There's no wrong one. But there's a one that matches for you. And therefore, you may have to do a lot of due diligence to find the syndicators, the right people that are out there that are doing the thing that you want to do. So I have a question for you at this particular moment. When it comes down to it, when you look into the future, now, yes, you're not prognosticators. You can't tell. No Nostradamus here. But I do believe you have an answer to this question. Let's pretend, for the sake of conversation, that we're of the opinion that, well, taxes are going to go up and inflation is on the way. In your mind, what is the plan of attack to be able to deal with that?
Yeah. I mean, I think, a lot of what we're doing in the real estate space is, hedging against that, right? It's by investing in assets where you can leverage that money, have it grow at a much faster rate than it otherwise would in the stock market, and also provide tax benefits, right? And all the deals that we do. Why do people want to invest in these deals? Because they want cash flow, or real estate in general. They want cash flow, tax benefits, and equity. What I love about what we do is that you can get all 3 of those things, but you don't need to have the time to manage and be a landlord, right? So I think that, even just our approach to doing multifamily syndication is the answer to both of those potential issues. I mean, depending on who you are and how you're able to leverage the passive losses, the passive losses can be huge.
You're giving secrets out. Stop it.
Yeah, if anyone wants to talk about that, I could talk about that all day long. I had my first year last year where I was able to really leverage the power of those passive losses, and it was through the roof.
Absolutely, 100%. So for the individuals that have listened this far and that are intrigued, they want to find out more about, what Goodegg is up to, what you ladies are doing. What's going to be the best way for them to track you down?
The best place to go is our website, goodegginvestments.com. And on there, you'll see a free 7-day email course that will give you all the basics that you need to know about passive investing and what syndications are. So it's called Passive Real Estate Investing 101. It's right there on our homepage at goodegginvestments.com.
Love it. So as we wind down, I've got a final question for you both, because I'm interested to hear your answer. Given how you started and where you are today, I think it's going to be very, very unique. Because the people that have listened this far, when they started listening, they were in one mental, emotional state. Now they're at another. And there are many of them who are at what I like to call the precipice of decision. They are looking over that edge going, should I, shouldn't I? And yet, at the same time, because we're human, that when we reach those types of decision points, we have a companion in the back of our head. It's a voice. And it reminds us of, well, it didn't go right last time. And oh my God, and are you're going to invest in real estate? Sure. Are you positive? I mean, I heard that was risky. And for some people, they're related to that voice. So I'm curious. Let's pretend that this time, even though all that's going on, they're going to follow through. In fact, they're going to do exactly what you suggest, and they're going to do it in the next 24 to 48 hours. What would you suggest that they do?
Well, the first thing I would suggest is to sign up for our Goodegg Investor Club. And what happens is basically it's a community of people who are just like the listeners, who are curious about syndications and passive investing and want to build a better life for themselves. And through the Goodegg Investor Club, then we'll start to get to know you, and we'll start to get to know your investing goals. A lot of people don't even stop to think about their investing goals or their life goals or what they want out of all of this. So that's the first step before you invest in a single syndication, is to figure out what you want out of it. So we'll help you through that process. And then after that, as we get to know you and what you're looking for, then we'll share investment opportunities with you, walk you through how to review them, how to understand them. And I think that's really where it begins. So if for over the next 24 hours, if all you do is just sign up, fill out that form, sign up for the Goodegg Investor Club, that is a great first step, and we'll take it from there.
And I'll just add that, like Annie already alluded to as well, I think, it really starts with, before maybe even you sign up for the call, or sign up for the call or apply for the Investor Club and then schedule a call ahead of time, but really think about what your why is, because I go back to that all the time, still even today. And it is, if I didn't know what my why was and I wasn't so solid on my why, I would not be sitting here in front of you right now. And that's really where it started for me. Was I had gone through some things with my son when I was pregnant with him, and I was real solid on my why. And all those voices in my head of, this failed, you're not good at that, you can't do it, who do you think you are, and all of that. I just was like, you got to go. There's no room for that here anymore, because I'm on a mission and we're going to make this happen. And because I was really clear on my why, that became so much stronger of a voice than the little voice behind me that was saying that I'm not good enough, you don't know what you're doing, you can't do this, et cetera, et cetera. So, yeah.
100%. I absolutely agree, understand, and appreciate the example that you guys are putting out there, the fact that you have the courage and you are making it happen for yourself and for others, because not everybody goes that extra mile to build something that allows other people to participate and get what they want. So that, again, takes a special kind of individual, in my opinion. And I just want to commend you guys for doing so. And then also just say thanks for taking the time to share your knowledge, wisdom, and insight here with us today at the Cashflow Diary.
Thanks so much for having us.
All right, ladies and gentlemen, you know what time it is. It's time for you to move at the speed of instruction. What does that mean? That means get over to goodegginvestments.com. Why? Because you know that you don't know everything you need to know in order to get this thing off the ground. That's why they give you 7 days email course to help you figure it out. But most importantly, you got to find out what is it that you want? Why do you want it? Because you will be tested on all of those things all the time. But most importantly, when you have clarity, as you heard, it can develop into a mission. It'll be a cause. And when you are on fire for that mission and cause, I promise you nothing gets in the way, not even that voice, even if you're related to it. Ladies and gentlemen, it's been fun talking to you guys today. I look forward to talking to you again soon. Until next time.